If the markets continue to contract, more and more possibilities to break out will present themselves. Which is why for today's video here at Data Dash, we will reveal which cryptocurrencies are perfectly positioned for a significant price increase for this year. So keep watching till the end. But before we go on, make sure to hit the like, subscribe, and bell button to stay ahead with our content. But other than that, let's begin. Dogecoin, XRP, Cardano, Polygon, Solana, Ethereum, and Bitcoin will all get a close examination. Today is a doozy, and we've got a lot of ground to cover up. But it goes without saying that we are not an expert on financial matters. When taking any financial position, you should do your own research. Past performance is not necessarily an indication of future success. So let's get into business. First, there is an intermediate top in Bitcoin prices around $24,000. We're keeping an eye out for it ahead of the market's potential rebound from this level. We also have that tiny bit of a pump up. And while I'm keeping an eye out for yet another leg lower, we need to be prepared for moves in any direction because we might be mistaken. Such invalidation thresholds must be displayed clearly. Now, although a decline did occur, it was much smaller than we had anticipated. We have that invalidation in hand. Once we were back above about $22.8 thousand, we started to pick up speed. What we're keeping an eye on in this transaction is the $24,000 mark. We predict Bitcoin will continue to decline until it can recover and sustain a price above $24,000. In Bitcoin, we hope to see a well-defined strategy like this. Indicators of support and resistance are clearly visible. Starting at the tail end of January and continuing through early February, there is visible resistance. This latest low gives us a point of reference. Therefore, go ahead and make a note of the progress bars on your screen. Ethereum, at last. Cryptocurrency symbol for Ethereum, F. The 4-hour time limit gives us a good look at the full picture, which encompasses 50 levels. The current market stability can be attributed to a macro 50 support level at $1,550. A distinct point of resistance has emerged recently at around $1,700. The cost of maintenance at the next level is roughly $1,800. If the market can break past its most recent resistance, which is also a short-term 50 level, then the 1,800 level becomes a realistic target. If the market is falling, however, we need to prioritize short-term negative goals, such as breaking below 50 and then 1,455 to invalidate the pattern. When compared to Bitcoin, which we also examined, the price movement of is remarkably comparable. Short-term 50-point increases are possible, as are examinations of previous market peaks and valleys. These methods yield a value of roughly $1,680. Thus, we will be eyeing those upcoming levels if and when the price may turn above 1,680 and start to hold. Now, let's head over to Solana. We now see that Solana, SOL macro 123 on the screen. There's a good chance we'll try again and succeed when we reach this point for the 4th time. When we can get back up there one step at a time, and for a pretty decent move to the upside, unlike the daily time frame. Here, we focus on the immediate future. The support begins to appear at about $22. In light of the current session's short-term swing bottom, we are expecting prices to drop to about $21. Down to about this $20, there's some space to roam. Solana's near-term flip level now sits above the most recent swing high. So, if you're wondering what's going on with these fluctuations, the white overlay at the screen's top shows the patterns. The Tiagan swing indicator is obviously responsible for this. As for Solana, make sure you'll be on the lookout for any potential negative effects on your trading and investing activities. You can also see the levels we're keeping an eye on to this upside. And if we can get back above this recent swing top, we'd be keeping an eye on the area right below $25 as a short term goal. If we can climb back up there, we can finish off Solana and reach the recently established peaks. Up next is the Polygon. The price has been having a hard time climbing in Polygon, and it's dangerously near to breaking down from the 1.20 zone of support, shown by converting MATIC to Polygon. Now, if it does go back below those recent lows, we have that 1.15, which we do think is a bit of a gimme trade. If we can go below that and close, we don't want to see any wicks and closes above it. We see 1.15 as a highly probable support level with the next support zone, somewhere between $1.05 and $1.10. Yet, we must do things gradually. The final destination is still in the future. The 4-matic flip level has recently risen above the previous top. There is a lot of opposition at the 1.30 cents pricing level. If the price manages to get back above $1 and begins a fresh 1.30, we will target 138, which is above the most recent swing high from February and the 50 level. Also close to the area encompassing the second swing top we spotted on February 23. Now, Cardano's turn. Now we've gotten into some mild Cardano. As we look in the near future, we can see a bit of a buffer right around this 35-cent price point. There are a few troughs in this area, the most recent being on February 25. The price action has been fighting an uphill battle, as is evident. What we mean is that there really aren't that many people looking to buy. With this next collapse, we may, of course, examine the cushion's underside. If prices drop below that support level, the 33-cent mark will become important again. In addition to a few tops from last December, we also have some from the previous year. We also have a few ups and bottoms from January of this year. Make a note of that on your graph. If you draw a line from the top down to the present low, we can observe the last two daily swing bottoms for Cardano, which is level 4 flip and is now off screen. Can use a price of 38 cents as a pivot point. So the price increase up to about 38 cents is really a short-term bounce. Next is XRP. In light of the lack of volatility, a trading strategy based on a narrower trading range may be more successful with XRP. You can now observe the screen overlay. If you look at a chart with a time frame any smaller than a day, there is a lot of chop and it becomes quite messy. So instead, we've included a 1-day, 2-bar swing chart. That's just how we see the markets though. There are consequently numerous minor breakouts in the short term. As a result, the market is suitable for scalpers, and it is highly liquid. Yet, a longer time horizon is preferable for trend trading. XRP is hovering around the 50 level on a rather high time period, which is what we're focusing on in terms of patterns. If the price were to fall from where it is right now without any support coming into play, the next immediate support level would be around 35 cents. In addition, there is a large expanse of undeveloped land below, at the way to 30-cent mark. Therefore, make a note of that, at the very least on your chart for XRP. Now, this white line around approximately the 39 to 39.5 level is possible overhead resistance for XRP and could be the point at which the price begins to turn. Then as it recovers and closes above these intermediate term resistance levels, the road upward into the 41 cent region is clear. Next is Dogecoin, which is the one we're watching the most closely because it appears to be forming a wedge. We can see a couple of bottoms and roughly the same price. There have been 3 previous lows, all about where it is presently. The 25th of February is clearly the low point. Even though we're looking at a 4-hour chart, it's possible to have overlays for longer time periods, such as the daily swing charts in yellow. This overlay of a longer time period is merely conveying some lore. There's a lot of pushback below the 50 threshold. This translates to a little under 8.3 cents. This 4th time breakdown in Dogecoin might be putting in quite a substantial move lower if we are going to be having another slump in the cryptocurrency industry. Planning a return trip to the 7-cent mark, with hopes of breaking into the 6-cent territory. What we're trying to debunk by observing this descending trend line from above to these recent peaks. Thus, breaking back above the 50 level, and the trend line now nullifies this larger scale move. So, we may start focusing on the next above levels, such as the 8.5-cent level, where there is more near-term resistance. If we are seeing a mildly bullish player, then the next overhead resistance levels. But so far, do you have some thoughts about these cryptos that we just dropped for you? Let us know your ideas in the comment section below. But besides that, thank you for watching. This is Data Dash. And if you enjoyed learning from these videos of ours, this is Data Dash. And if you enjoyed learning from these videos of ours, then go ahead and hit the like, subscribe, and bell button to stay updated for more of our crypto uploads for you. Thanks again for watching, and we'll see you next time.